Well, thanks for tuning into Countdown. My name is Neeraj Shah. Over the next 1 hour, we'll get you all the key updates and some opinions on key stocks that matter in trade today. First up, the index. And the index is doing rather well for itself, you have to say. We did give up some of the gains, but I think back to about percent and a quarter. So the going is okay. The Nifty Bank is up about 2.3%. But just before we get to the Nifty Bank, because that's the key driver, would want to mark what's happening to the rest of the world as well. So Europe, green, maybe some mixed bag, you would have to say, because a couple of indices are flattish as well. I think all the markets are awaiting the key US jobless claims data, which comes out later today, and that will have a bearing on what the US markets do, arguably maybe what the European markets do as well. US futures, meanwhile, they were in the green and they came off and now trading absolutely flat. So there's been a bit of a dip in the US futures, not quite impacting our markets as yet, but let's wait and watch. The other thing is what's happening to the bank Nifty, because that's the key index in the session today. It's gained about 2.36%. And why so? Well, largely courtesy. 3 banks and more importantly 2 banks. So Kotak Bank is 2.5% higher in trade, rather 7.5% higher in trade. ICICI Bank up 4.5% higher in trade, and there's some gains for HDFC Bank, which is up about a couple of percentage points. So these 3 are the principal reasons why the Bank Nifty is doing what it is doing in the session today. Good gainers. The other gainers on the index are Z Entertainment, TCS, as well as ONGC. On the losing side, there is Titan, which is corrected after the Goldman Sachs downgrade impact being felt on the stock, so trading at the lowest point of the day. And HUL and Shree Cement are the other losers. HUL has fallen to 2.5% intraday, now about 2%, but fell quite a bit from where it was. So there's a sharp gash at about noon, and since then it stayed lower. At the broader end of the spectrum, we'll mark stocks as we go along. I just want to highlight 3 or 4 key names. Z Entertainment is up. Z Learn is also doing well for itself. And the Reliance subsidiaries, I spoke about them in the trade setup today about how they could be active. Watch Hathway Cable and TV18, both of them are doing well. And at the other end, companies like Vodafone Idea, Glenmark and Equitas, all of them are in news and all of them doing rather well for themselves. So those are a few are the name of the stocks that you got to monitor in the session today. Okay, I think Brijesh Singh is with us. Let's try and get an initial perspective from him. In a bit, we'll get in Dipan Mehta as well. But Brijesh, good afternoon. Thanks for joining in. Neeraj here. How are you approaching trade today?
Good afternoon, Neeraj. Still look promising from a chart point of view that Nifty might head towards the previous swing high, that is 99,385. And by tomorrow, we might even try to break. What I've been witnessing from past 1 week and so, that the Nifty, the low or the base which has been made, we are shifting towards the higher end of the side. Now, when I say when the higher end of the side, that immediately Nifty had a support at somewhere around 8,800. It was been trying to retest. Now after that, it has moved up and 9,000 and around. So still the range is been intact of 8,800 on downside, followed by 9,500 on the higher side. But the plus point is that the base which has been made is not been broken, and we are moving up. Now the psychological marks 9,000 would be acting as a support. So overall trend is looking positive from me for a couple of days session has been concerned. When I posted the strategy for Nifty spot, that time Nifty was quoting somewhere around 9260 around. So still it's looking promising. Only the strategy we can revise the target and stop losses as such. Since Nifty spot right now is be quoting at somewhere around 9310 around. So any dip below somewhere around 93 and one can play for a long side with the very strict stop loss of 9190 and play for the target of 9450 around or to 9490 zone around.
Okay, so in light of that, what are the specific stocks that you're recommending in the session today, Brijesh?
So, Neeraj, I have 2 stocks, one on the buy side and one on the sell side. So I'll start with first a buy call. Now, CESC chart, if I look out on the daily time frame, the stock got corrected from a level of 743 and it made a low of 371. So we have seen a V-shaped sort of recovery, and it's giving a confirmation from a volume as well as from an indicator point of view that still trend for the bull would be intact. Somewhere around 611 the stock has been quoting. So present rate or any dip till level of 605, one can take a long position in it with a strict stop loss of 595 and play for the target of 635. Time frame to hold the counter would be a couple of days. Second call, which I'm looking is on a sell side, that is GAIL. The GAIL had made a high of 995, and after that we have seen profit booking. Now the negative part is from the oscillator point of view on a daily chart. They have made the lower highs formation, and with the increase in volume, it has came down. And even the inward hammered candle formation has been indicate for the reversal sign. So present rate it is quoting at 83 rupees 50 paisa or 83 rupees 40 paisa. So present rate one can take a sell position in it with a strict stop loss of 85, play for the target of 80 rupees 50 paisa. Again, time to hold the counter would be a couple of session.
Just one quick follow-up before we get in Dipan Mehta, and that query is on Z Brijesh. How is that one looking?
Look at the chart of the Z Entertainment. No doubt the stock after making a base at around 121, we have seen a recovery, and if I am not mistaken from yesterday's session, we have seen sharp recovery in it with increase in volume. So it indicates still trend would be intact. But present rate at the rate of 159 or 160, I would not be suggesting to go long in it. I would be suggesting let it come to somewhere around 150 or 152 zone. A small dip of correction or profit booking, if it comes, then your risk reward ratio would be in your favor. So ideally 150 around or 152 if it comes, then one can take a long position in it with keeping a strict stop loss of 140 around and look for the target of 175 to 180 zone in a week time frame. So a dip should be used to go long in it.
Okay, so do watch out for those stocks as well. Dipan Mehta joins in with his thoughts on how is he approaching trade today. Dipan, or not just today really, but but how is he seeing the setup of the markets? Dipan, good having you. Thanks for joining in. We are a bit of not quite at 7,500, not quite at 10,000. Wondering what are you doing? I remember from our last few interactions that you were fully invested already. But say if you had some cash coming in right now, Dipan, would you be tempted to invest now or would you wait for a bit?
No, I think I'd wait for a bit because I think even if price-wise correction, at least somehow rather index-wise correction would have taken place, there is still a lot of correction which may happen in individual stocks, and there is of course the time-wise correction. If you go back to earlier crisis in the market and the global economy, be it Harshad Mehta or the dot-com bubble or even the great financial crisis of 2008, it took almost a year to 14 months for the markets to bottom out. And I don't think how this one can be very much different. And it's just been 2 or 3 months, less than a month since we have been having these bearish trends. So we have a long way to go in terms of reaching a bottom and being convinced that the worst is over. And a lot of problems will start once lockdown is over, and then we are able to assess the exact damage which has taken place to the economy, global as well as domestic, and how consumer behavior will actually play out. So, while stocks are going up and down and there's a high degree of volatility, a lot of it is to do with trading positions, FII flows, and a lot of short-term money slushing around. I think from a longer-term perspective, there's still a lot of uncertainty as far as fundamentals are concerned. And keeping that in mind, we just like to go a bit slow, conserve cash, and then look for opportunities once there is more certainty. No problem, prices will go up, but at least you'll be more secure.
I wonder, okay, so that's a fair assessment. Now, Dipan, 2-3 stronger hands that have kind of come out and put their hands up, and I wonder your view on those, considering that you want to conserve some cash. This Reliance deal, and it's unique in the sense such a large global behemoth is coming in, and I think they'll set the tone for others to follow. Maybe others will not be able to follow as well. How did you read into it? What is your thought for somebody who doesn't have Reliance in the portfolio and might be wanting to add?
Yeah, I mean, see, there will always be opportunities for investors to reshuffle their portfolio. So while you may not incrementally add cash, I think you should certainly look at reshuffling your portfolio to position it for good outperformance once this crisis is over. And in that, some of the companies which are looking good, which have got good growth prospects and which may certainly outperform going forward, I would say Reliance is one of them. So from that point of view, no fresh investment into any securities, but existing portfolio, weaker positions, companies which may be impacted very heavily by lockdown and social distancing, they may be replaced by winners like, say, Reliance Industries or Bharati or pharmaceutical companies, healthcare, FMCG. I think those will be first off the block in terms of getting back to normalcy. So I think that's the way investors should try and position and strategize going forward.
Okay. So that's the word on Reliance Industries. The other bit, Dipen, and something that I'm kind of making a habit of asking everybody is this whole sell-side industry-wide view on specialty chemicals. Everybody seems to be bullish there. The prices are showing that Deepak Nitrite, for example, is up 5% on a day like this, on a day like today. We've seen some of the others hit highs. There was this Alkali Amines, which was up about 20% yesterday, up under 4-5% today. There seems to be a very constructive build-up of opinion in favor of specialty chemicals. Do you think, that such optimism is warranted? Because everybody says when everybody's on the same path, usually that path doesn't lead to anywhere.
Oh, sometimes even majority trade does play out, and we have seen that in Reliance itself, where most of the year, last 1-2 years or so, street has been bullish and it has been outperforming. So let's not jump to any such conclusions. It's not yet a crowded trade, I think. And, these are new investment themes which are emerging, that being disruption of global supply chain and benefit or thereof to India. And it has some more legs to go. So I'm quite positive on that particular investment theme, and keeping that in mind, all the specialty chemical companies. And I do feel that these companies have got a very good opportunity to grow going forward, purely because of what is happening in China. And this investment theme was pretty strong even before we had the coronavirus crisis. At that point of time, also because of trade wars, large consumers or the large MNC manufacturing companies were looking to diversify out of China. And I think post the coronavirus crisis, there's even more urgency. So I think it's a good, solid investment theme. And optically, it will look to be expensive because you're looking at historical growth rates and historical price points and valuation. But I think these companies have a very bright future over the next 2-3 years or so. But it's a nice long-term play. And again, as I said, when you want to position yourself for future outperformers, I would like to include this sector as well.
Yeah, in fact, I would presume, and a lot of people are talking about this not being just the next 1-2 year play, but maybe a decade-long play as well. So could be very interesting. Just watch out. The specialty chemical spaces and some of these names would be right up there. Brijesh, just come in on a couple of these names. Today, for example, Deepak Nitrite is up about 5% odd. Vinati Organics results coming out soon. That stock has not been as strong as some of the others, but largely been resilient in the fall. How do the charts look here?
Neeraj, if you talk about the specialty chemicals, Deepak Nitrite or Vinati or Alchem, even Alchem also, overall trend is looking positive. And if we check it about even with the pharma also, this has been correlated, and from past a couple of weeks we are seeing the stocks moving up. Now, if I look at the chart, especially from a Vinati organic point of view, now there has been a resistance zone at a level of 926. The stock has to cross on a closing basis, then it can move up around. But that doesn't mean that the trend has been over for the bull side. What I would be suggesting right now, the stock is quoting at 890 zone. So present rate or any dip till the level of 871 can take a long position in it with the stop loss of 810. And as soon as we see a stock crossing 925 or on a closing basis, stock can jump to the level of 1050 around in a week time frame. So Vinati Organ is looking promising on the chart for a short-term point of view has been concerned. Regarding with the Deepak Nitrite has been concerned, overall V-shaped recovery has been there on the stock from a level of 320. Stocks has moved up, and somewhere around 481 the stock has been quoting. Still is looking promising. Present rate or any dip till a level of 461 can take a long position in it with the strict stop loss of 440 before the target of 510, followed by 560 in a week time frame.
Okay. The other one, of course, which is important to monitor is what's happening to banks, right? We spoke about banks just before I get back to Dipan. Brijesh, just one quick follow-up on, say, a couple of banks which are looking not as strong as a Kotak, but strong enough for HDFC Bank and Axis Bank.
So if I start with the SDFC Bank now, on a daily chart, high lows formation indicates the trend is positive, but there is mild resistance at 965 to 968 zone. But still, overall trend is looking positive. I would be suggesting so. A present rate of 953. If someone is looking for a very short-term trend, one can go for a long side in it, present rate or any dip till 940, keeping a fixed stop loss of 930. As soon as stock crosses 985, stock has a potential to touch a level of 1020. So SDFC is looking promising, but it would be taking time to reach the level of say 1020. Whereas Axis Bank has been concerned, still it's not that much promising. Stock had been facing a resistance of 470 to 475 on the higher side, whereas on the downside 395 is been acting as a support. So it's been trading in that range, but trend is not looking positive for Axis. SDFC definitely one can take a long side in it.
No, if somebody is short Axis, should he stay short, Brijesh?
Definitely, if someone is if someone has gone short, then I would be suggesting keep a stop loss of 444 and hold on to your position. And as I've said, stock has been trading in the range of 395 to 470 on the higher side. So keeping a stop loss of 444, hold on to your short position. The first support level which I would be looking would be somewhere around 420, followed by 395.
Okay. Well, the moves in banks, as we said, have been exemplary today. Dipan, how did you read into this fundraising exercise by Kotak Bank announced yesterday? It's gotten the stock excited because the brokerages came out with a fairly constructive view on this as well. But how did you read into it?
I think it's more out of trying to meet the SEBI requirement for promoter holding rather than raising of resources. Anyway, Kotak Mahindra Bank was pretty well capitalized. And actually, unfortunately, the capital raising has to come when the stock has corrected in line with other banking stocks. So I don't think that it's more to do with the fundraising plan that they may have done. It's also that from time to time, these stocks do get beaten down, and there's going to be again a fresh round of kind of consolidation in the banking industry, and Kotak Mahindra Bank will be a major beneficiary. It will gain at the expense of some of the PSU banks, would be Yes Bank, RBL, IndusInd Bank, which are more stressed. So from that point of view, I think investors are gradually increasing exposure to the four large banks, HDFC, Kotak, ICICI and Axis, which have an extremely bright future, considering that in the post-coronavirus world, a lot of banks, NBFCs will be under tremendous stress in terms of credit costs and in terms of raising resources, whereas these four companies have like a clear run for at least a few quarters because of their size, because of their low level of NPAs, maybe lending practices, and because of their network and technology. So I think in all industries post-lockdown, the big will become bigger. The number one, number two player will benefit at the expense of the third, fourth, and fifth player. And that's going to play out in banking stocks as well. So I think that's the reason why we are seeing this kind of a up move in banking stocks at this point.
Okay. Well, Dipan, we take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you. Thank you.
Well, Rahul Mohinder is with us as well. Needs no introduction, really. Rahul, good having you. Thanks so much for joining in. What stage of a move do you think we are in? Is this a rally that can sustain, or would you reckon that there is a chance that we can break back and go all the way back to the recent lows? Because even in 2008, we had multiple such up moves which got sold into eventually.
Good afternoon. I think we are clearly in a phase, Neeraj, where the market's a bit undecided. And the way I look at it is from a technical standpoint, this up move that you've seen cannot be called a breakout. And I repeatedly kind of cautioned on the fact that what you're seeing is always being sold into, and again, you're having a rotational swing from a support. So I think largely the market is range bound. I think realistically, what am I looking at? 9,500 to 9,600. That's a testing point for the index. We probably get to those levels on the index in the near term, but I think that's where there could be some significant, resistance. So whilst we might get to that 9,600 level, I think what we need to see is can we move to 97 from there? And that's going to be, for me, the first green flag, if I may put it that way, for an upside. But again, the way I'm reading it is the Bank Nifty is weaker than the Nifty spot. I still would prefer, if you want to be on the long side, be short term, have a clear stop loss, be it on the Nifty only. But again, you have to look at the internals, and that's where things like the FMCG names, Reliance, that's what's bailing out the index.
Okay. Well, so that's the view on the index and a larger view, not necessarily just a trading view. By the way, the other thing that viewers you need to monitor is what's happening to IT today. TCS is up about 6%, Infosys is up about 5.5%, HCL Tech is up about 2.7%. So almost everything in large cap IT is doing well. I think I saw a couple of broader cap IT stocks to the likes of NIT Tech doing well. So there is strength in the IT index as well as the bank index, and that is what is helping. So look at Mindtree, for example, 4.5% higher. Oracle Financial about 1.5% higher. Tata Elxsi is up about 0.75% in the green. So almost everything in Nifty IT except for Tech Mahindra is doing rather well for itself. So good going really for all of these names. Brijesh, just very quickly, would you trade the Nifty IT or any of the large cap or mid cap IT names?
NIT definitely would be on my list. If I talk about NIT, the stock had made a base at 1020 around, and after that it has moved up. Now, if someone is looking for playing alongside present rate of 1193, the stock has been quoting. So present rate or any dip till 1181 can take a long position with the stop loss of 1165, and whereas on the higher side is concerned, to 1225 would be the first resistance. Stock, if after passing this level of 1225, stock has a potential to go to 1275. So definitely one can take a long position in it on NIT Tech.
Okay, so watch out for NIT Tech specifically in the session today. Now, the other thing is, when you look at companies on the index, largely the index, which are not doing well, Titan stands out, 4.5% lower, isn't it? The Goldman Sachs downgrade that came in today on Titan, saying that they see consumer buying hitting a bit of a wall. And if that were to happen, the impact that it can have on Titan, I would reckon the impact that it can have on Bajaj Finance as well could be very, very large, simply because these are companies that run on consumer finance, and you may not have necessarily some of these names doing as well as they've done in the past. If that is indeed the case, then you might not, if the earnings mojo gets beaten down a bit, and you never know what could happen. Is Rahul Mohinder back with us? If he's back with us, I'd like to go to him to a question. But while we wait for Rahul to come in, maybe just a quick thought out here from Brijesh on Titan. Brijesh, what do you do here with this stock?
See, if I talk about the Titan had made a double bottom at 730 and it has moved up. Now, on the higher side, if I talk about this stock has to surpass 1050 on a closing basis. Otherwise, the stock would be trading in this range of 1050 on the higher side, followed by 730 on the downside. But for a very short term, it's been concerned. Stock is looking a little bit weak. So present of 912, the stock has been quoting. So if someone wants to play on a sell set, so keeping a stop loss of 955, play on a sell set for the target of 875 followed by 855.
Okay, so watch out for these names. Now, Rahul Mohinder, you gave us your index view, or how do you expect the markets to behave largely? Can you fit in some stocks here? What are the names that you're watching out for? Rahul, can you hear me? Okay, I don't think we have Rahul Mohinder. We'll try and just connect with him in a moment from now. Do watch out for some of those ideas that will come in from his side as well. The other thing at the broader end of the spectrum is what's happening to telecom, right? So many people are inquiring about what's happening to Bharti Airtel, and Bharti Airtel really is an important stock to monitor, simply because after what Reliance has done, the question would be, will Bharti Airtel's rally fizzle away, or would Bharti Airtel actually gain a little bit simply because of the traction that could come into telecom at large? I think it's a bit of an imponderable. There is competition because the hands of the biggest competitor are now stronger with the kind of money that Facebook has put in, though none of it goes into debt repayment, but still. The other bit is that maybe telecom stays a two-trick pony, and therefore Bharti Airtel would benefit, even if it means that Vodafone Idea may not. The Vodafone Idea too has received some money from the parent Vodafone for immediate AGR-related payment dues and liquidity management. But that notwithstanding, I think the two telcos that everybody bets on, one of them is Jio, and Dipan Mehta answered about that. The other one, of course, is Bharti Airtel, and that is something that you have to monitor. Okay, one quick chart check on Bharti Airtel, Brijesh.
See, on a higher side, 525 and 528 is a resistance zone, whereas the downside has been concerned. Stock has a support at 477 to 480 zone. Right now, trend is looking weak, and even risk reward ratio is hardly same on the higher side as well as on the downside. So trend is looking weak. So I would be suggesting to go short, not at this rate. If it give rise to somewhere around 510 around, so play with the stop loss of 525 as a stop loss, and downside, as I said, 475, 480 is a target which I would be looking for. So right now it is looking weak. Higher rise or use rise to go short in it.
Okay, we have some queries and we'll go to them. But before that, a conversation with a fundamental guest, Pankaj Murarka of Renaissance Investment Managers. We spoke to him earlier in the day. Hear out what he has to say.
So essentially, I think what we're living through is completely unprecedented. This is something which has not happened in the world in the last 100 years. No one who's around has seen anything as close to this. In some dimensions, to my mind, this is even worse than World War II, which was between 1939 and 1946. The contraction which the US economy is going to experience this year will be the worst they've had in the last 70 years. I think it just goes back and reminds all of us about, the basic principles that at least, okay, before that, candidly, I never even thought that in my professional career I'll be experiencing something like this, because I thought wars are a history and will never happen in the world. What we're essentially fighting today is a biohazard globally. So it just brings us back to the basic core principles of, investing. One, when it comes to markets, never say never, because anything can happen at any point of time. And the second most important thing is all of us think that, we look at macroeconomic fundamentals, we look at what central banks are saying, we track the companies and what the managements are saying closely, and we spend all our time doing all of that. And eventually when we invest, we end up thinking that we know a lot about those companies. And when some of these, black swan events happen, you realize how little we know. So one of my mentors had taught me in very early days in my career that all of us invest out of ignorance, because while we think we know a lot, essentially we know very little. So I think it's back to the basic principle of investing. Never say never when it comes to markets, and always keep in mind that all of us are investing out of ignorance.
Well, that if that doesn't inspire lack of confidence, I don't know what does, Pankaj. But maybe it's the right approach, that be prepared for almost anything. And maybe this is something that I agree with you. Most people were completely unprepared for. And Pankaj, I think in this case, it's almost futile to blame anybody for not being prepared for it, because I don't think anybody would have seen this coming.
Absolutely. It's an exogenous shock. Maybe when this whole thing was playing out in China, and China always is opaque, so one, you'd never get information or data out of China. If any journalist would have written about it, I'm sure before it could have been out in the media, that journalist would have been landed in prison with his, body parts taken away. That's how China functions, right? So one, the world did not get enough information out of it from China, and then I think at some level globally, leaders and economists or financial market experts grossly underestimated the potential of this whole thing. We thought that it would be one of those SARS and Ebola, but it's much more vicious as it turned out, than that.
Okay, well, that was, I think it sums up what all of us think, that this is kind of unprecedented. It's not something that we've seen too often, and keep that at the back of your mind. Okay, while I'm told Agam Vakil is with us, but it's about 3 o'clock, so it's time to get in some queries first, and then we'll of course talk about what's amongst the biggest stocks of the session today. So we'll get to Agam Vakil in a bit, but first some viewer queries. Pratik Bajaj and Rahul Mohinder is back with us, so good to get those queries going. Pratik Bajaj is asking for views on L&T and L&T Infratech. Rahul Mohinder, we haven't taken your ideas yet, but can I request you for a view on Larsen and Toubro?
Yeah, absolutely. Well, I think one has to look at this as negative for the moment, particularly if you're someone looking at the short term. The stock is still clearly pointing down. In fact, today's down move also further confirms that we'll probably head lower. I wouldn't be surprised seeing it around 760, 770. So this would be a stock which would clearly be in my sell list with a stop loss at the 865 level.
Okay, so that's the view on this one. A small stock, and that is Vodafone Idea. I wonder if you're even thinking of it, Rahul Mohinder.
No, unfortunately, that's gone off my radar for a long bit.
Yeah, well, so there's a query from Gaurav Jaggi on Vodafone Idea, but can't take it. Oh, I missed one more query, which is Anand Kumar. He's asking for a view on Affle India. Again, a stock that's been very choppy in that it runs from circuit to circuit at times, but a difficult stock maybe to track. Rahul, any thoughts here? Affle India, and if not Affle, maybe an IRCTC?
Well, if you look at, again, these are not stocks which I track considerably, but at this point, these stocks, still look negative. And the point is, what people want to know at this point is, shall I enter these stocks, or, I'm invested in these stocks, should I get out of them? So I think one has to hold one horses here, because if you're a longer term investor, I guess you probably are, if you've gotten earlier on, you're already bleeding to a strong degree. And, at this point, telling you to stop out would also not make a lot of financial sense, because getting to a recovery mode will take its time. So these are stocks which you could probably hang in for a few months and then review the situation. But both of these stocks, if you're worried about the short term, yes, I still think they're going to go down another 10 to 15%.
Okay. Well, so that's the view on some of these names as well. Rahul Mohinder, you want to quickly just give us your recommendations as well before we get to Agam on HUL? What are the stocks that you're recommending?
So today I'm looking at Tata Steel. The stock finally recovered after a big drop over the last 2-3 days. And I think I would use it again as an opportunity to sell. So going short on Tata Steel, keeping a stop loss, above the 280 level, because that's where there's a significant resistance. I'd be looking at much lower levels coming on this stock. So to start with, maybe the previous lows of about 250, 255. And then finally, I think the stock would actually tumble to levels of 225. So a fairly fierce call. Again, this is not an intraday call. This is not a call I'm making for 1 week. One has to have a little bit of a time horizon here, but I clearly see a lot of volume build up around 280. And that will be a major, major resistance for this stock. So keep that as a stop loss. Jubilant Food, that comes in my buy list. It's one of those stocks which has been able to claw above the 200-day average, stay above it. So it's been resilient even in the last few trading sessions. So targets on this one, 1640 in the shorter term. I'd keep a stop loss of 1460 when buying Jubilant Food.
Okay, so those are some ideas. Now a stock which has come off from the highs of the day, and that is HUL, and the reason is the parent's submission or press release or whatever you call it. Agam Vakil, who tracks the space very closely, Johnson right now, with his thoughts on what the update was and what does it mean. Agam, good afternoon.
Good afternoon, Neeraj. Well, Unilever PLC has come up with earnings for the quarter ending March, and while they've reported flat earnings, they have also withdrawn their full year guidance of around 3 to 5%. The reason why this is concerning is because there certainly were some comments made on its India business as well. The company owns around 62% in Hindustan Unilever and is the parent company of HUL. And HUL in fact contributes to as much as a tenth of the consolidated revenues for Unilever, which is why this announcement becomes important. And they've made some comments on the India business. They say that the lockdown has weighed on its earnings for this particular quarter. They haven't really given us an exact number as far as HUL is concerned, but they do suggest that skincare and hair care in the personal care space overall has been it's seen some amount of weakness. And besides that, they're of course looking at a little more coming through as well. They also noted noted that this weakness had already started playing out before the lockdowns came into play in India. And once again, we'll be watching out for how things pan out. But for now, they've sounded out not the best of commentary when it comes to its Indian business, and that's probably why Hindustan Unilever is off days highs right now.
Agam, does this in any fashion tell us anything more about what could be happening to the space at large, to the staple space at large?
Neeraj, we all know that because of the lockdown, there was a lot of stocking up, which is why a lot of these FMCG companies did see significant, increase in perhaps the first 2 or 3 days before the lockdown came into place. And after that, there was a sudden decline because, factories stopped producing. And because of that, we are expecting some amount of weakness across the industry. So those 2-3 days were not enough to cover up for the significant decline that we've seen for the complete or for all of March. And that is something that will play against not just HUL, but a lot of the other FMCG companies as well.
Okay, Agam, thanks so much for putting that into perspective. And the stock has come off quite rapidly today. Rahul Mohinder, you want to comment on HUL? It's a strong stock generally, but valuations are high and not the best of updates from the parent.
On the news front, point well taken. And again, I would put it this way, that the stock that has outperformed, clearly in this market has been HUL. I think what you're seeing is again corrective. It's too early to call this a breakout. In fact, I looked at the volumes very carefully. If you look at the volumes all the way, in the last 4 or 5 days, there's a steady decline in the volume when the stock corrected from the phase of 2,500 to 2,300. So, even if I get really macro into it, I don't think that this is something to panic about. We're yet to even clock above average volumes today for HUL. So this is not a down breakout. This is not a point where I would panic. But at the same time, those who are looking at a very short-term outlook, I think the level that you need to eye very clearly on HUL is going to be 2250. If 2250 breaks down, I would definitely think this stock can take a bit of a stronger correction. So keep 2250 in mind if you're long. That's a clear stop loss level. If you're looking at going short for the short term, I think only on a breakdown.
Well, some of these companies are looking slightly wobbly today. Paras Edenwala is with us as well. Paras, good having you. Thanks for joining in, Neeraj here. Did you have a chance to look at the update from Unilever about the India business, which is the HUL business? And as an investor, what do you make of that?
Yeah, hi Neeraj. Yes, I did have a look at the update, and it's not really surprising considering the fact that we are in a state of lockdown, and most companies are operating at suboptimal capacity with their warehouses kind of locked. I think one couldn't have really expected anything better. So I think I'm not really surprised by what Unilever has said.
Paras, what does this say for a pocket which is believed to be the most unscathed in this environment and is trading at premium valuations? Because I can understand an Emami, etc. may not be, but HUL, Nestle, to an extent Britannia, are all trading at premium valuations. And if this is the kind of update that comes in, should they trade at these valuations?
No, certainly there will be a correction. But having said that, most of these guys, they deal in basic essentials that are needed for the people. And therefore, there is always going to be demand for it. So if there is any industry which is going to recover if the lockdown is lifted, I think it is going to be these guys. In addition, if you look at the business models, the quality of management and the balance sheets, as we all know, I think they are also premium to the rest of the industry. And therefore, the premium valuations will continue. But would I want to buy any of these guys at a P of 60 plus? The answer is no. I would definitely wait for a correction to be getting into them.
Okay. Are there any other winners, Paras, which from a business continuity and an earnings perspective on a relative basis look relatively better, but the valuations are very price punchy, and therefore you might want to not buy them, if not sell them at least?
I think pharmaceuticals is another space where we've seen a very good run-up happening. There have been good amount of positive news flows, especially emanating out of US FDA. But are we going to be seeing a recovery in the fundamentals in sync with the improvement in the prices? The answer is no. I think the entire sector has been re-rated very significantly. Not long time ago, we used to have the Indian pharmaceutical companies quoting at an average PE of about 18 to 20 times, FY21. And all of these guys, the entire industry average now has moved to about anything around 24, 25 times, at least, if not more. And if you look at the pharmaceutical MNCs, again, there, I think there has been good amount of re-rating happening. So while the pharma MNCs may report reasonable numbers, the Indian pharmaceutical companies, as I mentioned, may not report in sync with what has been stated. Ditto for specialty chemical companies, again, where the business models are robust, but the plants, if they're shut down and operating at suboptimal capacities, are you going to be seeing the numbers coming in from them? The answer is no. So if one is really buying into these guys, it has to be at least a 3 to 4 year view. And there is always a possibility that in this quarter, March quarter certainly will be better because I think a large part of that quarter they were working. But the first quarter of FY21, I think you might not see too much happening. And I would say even for the rest of the year, don't expect too much to happen because even if the lockdown is open, you will see some teething issues, once they reopen the plants.
Okay, so watch out for. Well, it's an interesting view, and why not? Why not think like that? The other set of names we talking about FMCG some time back. A couple of stocks which are showing positive trends but have come off. And Brijesh Singh, I would want you to come in on United Spirits and United Breweries, particularly United Spirits. Yesterday there was very good price and volume action. A lot of funds were heard to have been buyers. It was showing some intent, but somehow that's got fizzled out today in United Spirits.
See, United Spirit, if I talk about, still United Spirit has to be closing above a level of 555 or say 560, then the clear trend for the upside would be there. Otherwise, what I would be thinking is that purely from a chart point of view, the stock would be trading in this range of 555 on the high side, followed by 505 or say 510 on the downside. Now, at this juncture of time, looking the hourly chart or even the daily chart, stocks can come down. Right now, it's quoting at somewhere around 529. So if someone wants to play for a sell side, I would be suggesting keep a strict stop loss of 541. Go on for a sell side, look for the target of 505 or say 507 around.
Okay. Well, let's wait and watch how that shapes up over the course of the next few trading sessions. In a bit, we'll get in what dealings are recommending in the session today as well. But as we speak, of course, HUL is down about 3%. Shree Cement is the other interesting one, which has cracked about 3% in trades, so not the best of days. Bharti Airtel is again sub 500, so 494 or thereabouts. So watch out for that one. And today, what has shown a reasonably sized crack is HDFC Life, 487, 3% lower. Now, much as people would have loved to think that insurance will not have an impact, I think the HDFC Life management was candid enough to say that because agents are not able to go out on the street and try and convince people to buy, the sales had come to a grinding halt. Just that they used the term grinding halt. Just that when it opens up, I think business will probably come back because everybody would want mediclaim as well as life insurance. What are your thoughts here? Would you use dips to buy, or are these stocks expensive?
I think for expensive stocks, I would certainly wait. While I'm very positive on the insurance sector because that's one sector which is a sector which has tremendous amount of potential, considering the fact that the Indian society is grossly underinsured. And therefore, I'm quite positive. But do I want to buy it right now? If it's a short-term view, definitely not. Even for a medium term, I would not. But over the longer term, yes. And it has to be a staggered buying. Do I see a downside immediately? The answer is yes. And therefore, if one is saying that I'm buying in 5 installments, then one should go ahead and buy. But otherwise, it's better to wait.
For all the names, all the life insurance names, all the general insurance names.
No, I'm talking about the life insurance and even general insurance. there again, while there is potential, because for the same reasons that I mentioned for life insurance, but again, there you are going to be seeing a decline, in the growth rates, which I think holds true for the entire Indian spectrum of businesses in India. So I don't think the valuations are capturing completely the slowdown. And are we near the end of the lockdown? No one knows. So, my view right now on most businesses is not particularly positive. And if having said that, we have been buying, but in a staggered manner. And I would definitely, kind of hold on to cash levels, to ensure that the portfolio is sufficiently kind of hedged.
Okay. Stay on, gentlemen. Let's get a sense of what dealing moves are recommending in the session today. Mind you, Infy and TCS are top of the pile, both of them 6% apiece. I wonder if Darshan has heard anything about those, or Darshan, are we hearing about something completely different?
Yeah, so a couple of stocks. I'm sorry, I didn't get which stocks you were speaking about. But I'll tell the ones that I've heard, and then I'll come back to what you had said. So I think Alembic Pharma is up almost 9%. And the result and the reason is the strong result that came out, almost very strong numbers, 13% growth in the Indian market, almost a 200 basis points improvement in gross margins. The EBITDA margin has come up higher by almost 200 basis points than what was expected. US did well. So overall, I think a strong set of numbers. I think more details will come in on the conference call. But yes, Alembic Pharma. The other one which has surged 6% is SRF. Some of the domestic funds are buying. So there is a lot of traction there. And one counter which actually hit a 10% higher limit and then has actually come in lower this time around is RBL Bank. So there's a buzz of a potential corporate announcement that could come in, and that's what dealing rooms are indicating. I'm sorry, I didn't hear which stocks you were speaking about.
Asking about TCS and Infosys.
Not much. I think the only the rupee factor is the one, and I think they're done with the results, and I think that's been digested. That's the only thing that's been spoken about.
Okay, great. Darshan, thanks so much. But watch out for those names. Alembic Pharma is the interesting one. Rahul Mohinder, again, a small name, but very active on days when it wants to be. Any thoughts here on the charts? Do you track it at all?
No, pharma definitely could be one of those sectors which continues to rally, and particularly because people are looking for ideas where they could get a quick return, and this has been a stock which is in the buzz. And again, what points me to it is look at the volumes just of yesterday's, probably 4 or 5 times the average volume. So very big surge in price along with volume. So I kind of like the whole pattern that the stock has built up at this level of around 43 to 49. And I think there's probably more to come. So good volumes that we're clocking today, which is promising. Intraday yesterday, we saw good bouts of volume too. So, I would advise that keep your stop loss below 44 and remain invested. Or if you're getting in also, keep that 44 stop loss in mind. This could be one of those stocks that you need to hold on for 3 to 6 months.
Okay, we'll watch out. By the way, Rahul, any thoughts on TCS and Infosys?
I was just about going to come to that. In fact, I would probably recommend it for BTST as well if I could extend myself there. Both these stocks, they've clearly come up on my radar as a clean breakout. And if you're looking at Infosys, we're clearly looking at the stock moving to 715 to 720. So I'd buy in there with a stop loss of 655. TCS too has given a very strong breakout. And again, all of this is backed up with solid volume. So we're looking at 1940 as a near-term target on TCS. I'd recommend buying it with a stop loss below 1845.
Okay. Well, almost since we are on almost at that time, so maybe taking the BTST. So from Rahul Mohinder, I think it's these IT names. Brijesh, what about you? Your top BTST or STVT as the case may be?
Yes, two calls are there for the BTST. One is Ujjivan Finance. The stock is quoting somewhere around 180 around, so one can take a long position in it with a stop loss of 174. Play for the target of 192. And another call would be an SDFC Bank. The later half indicates the volume breakout, so I would be going long in it with the fixed stop loss of 938 and play for the target of 978 followed by 988.
Okay. Mind you, viewers, Europe is a mixed bag. Even now, the Dow futures are still lower. So the world markets are not that gung-ho. We are dancing to our own tunes today, led predominantly by the banks and IT, as I said. It's interesting that the bank Nifty is having such a wide outperformance, despite Nifty IT contributing in a big fashion, because it's not just TCS and Infosys, by the way. HCL Tech too has done well. It's just the strength of Kotak Bank predominantly, and then ICICI and HDFC Bank, both of them contributing, which is leading to this. HDFC Bank is back to levels that it was at immediately post the announcement of the results. Remember, yesterday, HDFC Bank had dipped all the way to 908, 907, and from there it's back to about 954. So a remarkable show by a remarkable stock as well. Let's wait and watch if it bounces back. But it must say, if it goes back further, but this is a bit of a new normal for HDFC Bank, sub 1,000, bounces back at about 850 or thereabouts, and then tends to move up to 1,000 or thereabouts. So do watch out for this one as well. Paras, we have the first tranche of the TLTRO for the mid-sized NBFCs tomorrow, I reckon. Some of these are very active today. We have strength in Equitas, Ujjivan, a couple of others as well. LIC Housing Finance is up about 9%. Any thoughts here?
Yeah, I think these are measures, which will certainly help, the beleaguered sector. But I think probably they may need much more help than what the government has given, considering the fact that we are completely in a state of standstill, and the risk of delinquencies is definitely very, very high. So I'm very happy with whatever the government has done so far. But as I mentioned, more needs to be done.
Paras, if you are skeptical about what the consumer would do, would you be in sync with what Goldman Sachs has said in their note about Titan? Would you be skeptical about what Bajaj Finance could do in the near term as well? These are blue chip names, but they might face the issues of consumer spending being very, very restricted.
Absolutely. I think, and it's a very, very short-term view. Over the longer term, there is definitely, a potential for all these names. So in our client portfolios, we have been buying in a very staggered manner. Every dip is being used to kind of gradually keep on adding, but we are not buying in one shot. So I'm very positive on them. But whatever I mentioned earlier, about the various segments that you asked about, the consumer segment of the pharmaceuticals or the specialty chemicals, I'm very positive on all of them. But I would be very skeptical if the investment horizon is absolutely short term.
Got it. But there are some stocks that have jumped up meaningfully. One of them is Moil. Look at what's happened to this name. The last 20 minutes, it's jumped up about 14%. Cumulative gains of about 17.68%. Really strong show. The other one which has perked up a little bit, not as much, but perked up a little bit, is Astral Poly. It's up 4.5% in total, but a couple of percentage points in the last 20-25 minutes of trade. One name each. Astral Poly to you, Rahul Mohinder. Any thoughts on this one?
I'm sorry, which stock are you referring to?
Astral Poly. Do you track it? If not, if you have a view on Moil or a Tech Mahindra, even that is fine.
Well, if you look at Moil, I'll comment on that because that's one which I've been looking at of late. The stock has really rebounded very strongly from that recent low of around 85 that it made, and I think there is more to come. If you look at, you're looking at a reasonable upside on this to about 160, 165, which was closer to the highs that it made in January. The stock's already today broken above the 200-day average, already got double the average volume. So it kind of ticks a lot of boxes for the near term. So with a stop loss of 132, I still think one could be targeting anywhere between 160, 165 on Moil.
Brijesh, any thoughts on Astral Poly?
See, Astral Poly has made a base at around 850 zone, and after that it has moved up. Now at this rate of 905, I would be suggesting still trend is looking positive. Present rate or any dip till below 900 can be used to go long, keeping a stop loss at 870. There's a minor resistance at 925 zone, but I think that would be crossed since the volume breakout has been witnessed in it in the later half, what you have said. So chances are that stock would be trying to touch 965 to 970 zone. So keeping a stop loss of 870, present rate or any dip can be used to go long for the target of 970.
Okay, I want to bring up one name, Paras. Again, related to consumers, but a slightly different breed of sorts. Varun Beverages. Interesting distribution, not just in India, across. Plants were shut. Now with the lockdowns, if at all the lockdown shows signs of opening up, if it does, then the plants open up, the distribution goes up again, and the valuations have come off for this name to about 21 times from what they used to be. Would you keep this on your radar? Do you track it at all fundamentally?
Absolutely. In fact, Neeraj, we just added that name, into the portfolio, just because of the kind of correction that it has seen, and being kind of a food product company, and the kind of market share it has, although it does not own the brands, but the kind of market share that the products have, and being a PepsiCo franchise. So all of these things are quite positive. And this is one company which is quoting at a steep discount to the industry average. And therefore, I'm quite positive on it. And I think what also would make the company very attractive is that deleveraging plans over the next 3 years. So I think if that really plays out, we should see a far healthier balance sheet than what it is today over the next 3 years. So at the current levels, I would definitely be a buyer.
Okay, so you believe there's a medium-term play of debt reduction and a near-term catalyst of the lower valuations, both of which aid the buying out here, right, Paras?
Absolutely, yes.
Okay, Paras. Any investment idea do you want to leave us with?
I think while my view on pharmaceuticals is what I mentioned, medium to long term, it's quite positive. But there is one stock, which I think is looking interesting, even in the pharma space, despite the run-up, is IPCA, because that's one thing which has kept on delivering, quarter after quarter and year after year. And disclaimer that we have been owning the stock for a while. So despite the run-up, I think this is something which is really looking interesting to us. The valuations on FY21 have moved up, but the moment we get on to FY22, the stocks starts looking cheaper. So this is something that we would definitely want to buy into.
We'll leave it at that. Paras, thanks so much for joining in today and giving us your perspective. Really appreciate your time.
Thank you.
Quick chart check, Brijesh, on Varun Beverages. Looking slightly wobbly today. Does it have some supports in the near term?
See, if I talk about the Varun Beverages, no doubt the stock had beaten from a level of 846, and after making a low of 490, it has moved up. Now, at the present rate at 624, I would not be suggesting to go long. Stock has a resistance at 660 to 670 zone, whereas the stock has a support at 595 around. So I would be suggesting if someone wants to play long, not at the present rate, if it let it come to somewhere around 595, then one can go on a long side with the strict stop loss of 560, and again look for the target of 660 zone.
Okay, we will watch out for those names. Now, viewers, just give me a second. I just need to log into my stock page, but let's start wrapping up the markets. Okay, here we have it. Let's start wrapping up the markets. We're ending up well, about 2.6% for the Nifty Bank, 1.4% for the Nifty. So the end is not bad. What's aiding this move? One, non-banking, it's TCS, Infosys, ONGC, and HDFC Bank, ONGC. So IT as well as ONGC and Eicher Motors aiding, and then banking includes a Kotak Bank, that big robust 8% move, big candle there. ICICI Bank 4.5%, HDFC Bank about 2.7%. So those are the names that have really aided the screen today. What has not done well, unfortunately, Titan about 3.7% lower, HUL 2.7% lower. So it's not turned out to be a very great day of trade for the FMCGs. In fact, Nestle has corrected about 1.5% too. So yes, these stocks have looked slightly wobbly. Bharti Airtel has had some iffy trades today, down about 1.23% at 495. Some of the auto names like Hero MotoCorp have corrected, so that's not looking all that great either. What about the broader end of the spectrum? Well, pull up stocks in the mid-cap space, and what's not done well, AU Small Finance Bank down about 4%, Max Financial down about 3.7%, Biocon down about 3.8%. There is weakness in Central Bank of India, 3.8%, Colgate Palmolive about 1.7%. What's done well? LIC Housing Finance, Muthoot Finance, actually Equitas, Ujjivan, LIC Housing Finance, all of them have done very well. I reckon it might be to the TLTRO tomorrow for the NBFCs. Maybe that's what's actually aiding these names. Glenmark Pharma about 7.5%, Tata Chemicals about 5.5%, CRISIL has some gains. I think numbers were good for CRISIL, up about 5% in trade today. or yesterday the numbers came out, but the stock is up about 5% today. And Emphasis and NIT Tech from the IT pack too have looked okay for themselves. But as the markets have shut shop, you have banks and IT being the principal contributors in the session today. I reckon that the market breadth would be in favor of the advances, so no prices for guessing that. And as I said, the European markets are looking mixed, and US is closing flat, so we don't have the best of views for tomorrow morning as of now. Let's wait and watch if they change. But final thoughts from our experts. Rahul Mohinder, in light of what's happened today, you gave us a long-term view. What about the short-term view?
I think short-term will continue to be range-bound. I think 9,500 to 9,600 big block hole on the Nifty index. And this is a market where you will be rewarded to be very stock-specific. So, I would take the strategy of sell the weakest, buy the strongest, which is why my eyes moved to an Infosys and TCS today, or buying a Jubilant for that matter. And, selling the weakest stocks which have really been beaten down and continue to look weak, according to me, stuff like the metal space, Tata Steel, Hindalco. Even some of the banks are not out of the woods. So I still think there's enough space to trade both sides, and I think that's exactly why I expect the market to be largely sideways, and we will continue to kind of tussle between 95, 9,600 on the upside. And if you're looking at the downside, there is a very strong support, for the Nifty at lower levels at 9,100. So I think once that level breaks, or either of these levels break, 9,600 or 9,100, that's when we'll get the next biggish move.
Okay. What about you, Brijesh Singh?
See, Neeraj, I still look that Nifty is still trading in the range of 8,800 on a downside, followed by 9,500 on the high side. And I'm looking for tomorrow has been concerned. Definitely, it's looking positive. FMC sector and as well as the IT, or even I would be saying the banking sector, most probably the private sector bank has outperformed. So the chances are that tomorrow the rally would be again continuing. So Nifty, I'm looking 93.85 followed by 94.90 around zone. We might try to test, and after that we might see a profit booking. So still overall trend looks positive to me. Buy on dip strategy would be there. Use strict stop losses whether you are on the long side or on the short side.
Okay, Jem and both of you, thanks much for taking the time out and being with us today. Really appreciate your time for joining us and your thoughts, more importantly. And viewers, it's turned out to be a good day of trade. The question is, can the momentum sustain? We'll get to know tomorrow. For now, though, from all of us who put this show together, thanks so much for watching.